But one conversation that you should not be missing today is with the management of Hindustan Copper, with the way copper prices have been. Copper has been on a tear up almost, 42% over the past 1 year. The stock also seen gains of 1.5%. Let's quickly pull up, a 1 year chart. Neeraj, 112% up move in the last 12 months, and no stopping from here on is what we are seeing.
42% uptick in the base prices as well. So I think it's just best to get in the man who understands the business so significantly, Hiral, to try and understand what happens in the future.
And the impact on the company. Let's get in Sanjeev Kumar Singh, CMD at Hindustan Copper. Mr. Singh, welcome to the show. Wishing you a happy new year as well. We don't know where to start this conversation with. 42% upside in terms of copper, 112% up move in the stock price of Hind Copper as well. Lay this for us. What is in store for 2026?
So I'd like to wish you a very happy new year to you and all your viewers who are seeing this live. Basically, the prices are the factors of the supply and demand, as you know very well. Supply constraints have already come up in last 6 months, and in further coming 6 to 8 months, it will be maintained. And the demand has certainly surged up. I'm saying, because you just see AI data centers were not in the picture. In last 6 months, they have become the largest user of the copper. And you see, the productions have remained stagnant. No big deposits have come up. So things are, on the supply side, very tough, I should say. And demand is increasing day by day. Electric vehicles, you know very well. Mobiles, infrastructure, windmills, renewables. You talk green energy. In fact, anything green which you talk consumes copper. So the demand is increasing drastically. In fact, I can say proudly that the copper is empowering the energy of not only India, the globe, I should say. So copper becomes a very important material to come in the future days.
Sir, thank you so much, Mr. Singh, for joining in. And to you, a very happy new year. This is Neeraj Shah here. I want to probe that point a bit further. The demand-supply mismatch is right up there. There are smelter ramp-ups happening, but you are the sole miner, if you will, right? How do you see? Can you add some numbers to this conversation and tell us how long do you see this demand-supply mismatch lasting based on the current estimates that your strategy team would have done for demand versus supply?
See, this is a very difficult question to answer me, but as far as India is concerned, I can tell you very well. We have our own plans to ramp up the production. Definitely from 4 million tons, we'll be going to 12.2, which is about 3 times of the current productions. And we'll try to make this copper concentrate, which is in the range of 28,000, to the tune of, say, 90,000 or 1 lakh. This is our strategy to help India, because we are the sole copper miner to the nation, and we have a prime duty also to fulfill our needs. So that is our strategy. But as you asked, see, demand is definitely going to come up. For example, China is going to upgrade its power grid. No quantified figures have come up. The Google, who is going to establish the data center in Vizag, yes, $15 billion investment is there, and roughly more than 65,500 tons of copper is required. Microsoft's data center, then our data centers, Adani, Ambani. So these data centers are there, you can quantify. But basically, there are a lot of other demands also which are pitching in, which will make the demand side very, very tight in the coming financial year.
No, sir, please, just to lay the caveat here, I'm sure that you are going to try your best in the duty for the nation to try and ramp up the output, try and, in some sense, give as much supply as possible. But there are limits to what can be done by a corporate as well, right, within a particular financial year. And hence my question, that do you expect this deficit to last for a better part of FY27, FY28, FY29, based on the assessment or the numbers that you may have done for now?
See, 27, 28 is very difficult to predict, but 25, 26, I can very well say that the deficit will remain, because, see, we are also not able to supply majority of the part. We are able to suffice only 4 to 5% of the copper needs of the country. So you understand this also. We are not able to do that, but we are ramping up. to bridge this gap, which I already mentioned. So we are trying our best to bridge this gap.
Mr. Singh, then my question to you is, you have visibility when it comes to the deficit for 2026. Now, when we've seen higher copper prices, they've always led to an improved revenue realization and a sharper increase in your profitability as well. Pretty much evident in the way Q2 numbers panned out, where your profit surged, 81%. Likewise, with the rally that has come in right now, would you see a major uptick in the second half of the year in terms of FY26? Are you increasing your outlook when it comes to your profit numbers and margins?
See, I can't comment on the profit numbers as of now because third quarter has just ended yesterday. But definitely we'll see some better realizations and better results than compared to last year.
So will your margins and profitability and top line growth be equivalent to what we saw in the first half in terms of, okay, let's look at CAGR growth for the last 3 years. What is that uptick that you're expecting?
Ma'am, one thing I'll make it very clear that definitely it will be better because you see in $100 variation, if the LME prices rises $100, we roughly we get profitability of 20 to 25 crores. So that is our estimates. That is our basically walkout for last 3 years. If you see our annual reports and all that, you can come to a conclusion that for every rise of $100, we roughly generate a profit of 20 to 25 crores. So that is a very tentative, very rough estimates which I'm mentioning.
Got it. But would you believe, sir, that based on, with an assumption that the demand-supply mismatch remains tight for 2026 at the very least, and maybe longer as well, that the higher EBITDA per ton for your company, or the EBITDA number for your company, could sustain for a better part of the next 12 to 18 months?
Don't say 18 months, but yeah, definitely for 12 months, that is there. We'll be doing it. We'll improve our EBITDA margins not only by this LME prices. Mind it, our operational efficiency is also going up. You see,
Of course.
we have maintained our expenses also. So as far as our working is concerned, we are more devoted to that part than to the LME and dollar variations parts, because our duty is to optimal efficiency should be there, and operational efficiency is our prime parameter.
No, I mean, any which is what's happening on the LME is beyond your or my control, sir. What is within your control is how efficiently you run your companies. I'm sure you're doing that well.
Yes, that's there.
Yeah, perfect. Okay, just a word on the expansions as well, right? I mean, from what I read, from what my research team has given me, Malanjkhand is targeting what, 3.5 MT ore in FY26, if I'm not wrong, and Jharkhand adding about 1.3 MT, if I'm not wrong. So are all the ramp-up plans for Hind Copper on track, Mr. Singh?
Yes, they are on track. And I'll just like to add that my production program for 3031 is 12.2 million tons. From Malanjkhand, I'll be mining roughly 5 million tons. From Jharkhand mines, which were closed earlier. See, that is an advantageous part to us. Those mines have reopened. Government has given us leases. The tenders are in process. One mine has already started. Second one is going to start. Already the production will start from January. The third one will come up next year. So the ground reality is completely clear. Nothing to mention from my side. The Khetri mines, which are in Rajasthan, will produce 2.9. So if you add all these figures, 2.9 plus 5 plus 4.3, it comes to 12.2. So these are our targets, which we are moving ahead. And things are in line. The tenders are in place. The Capex is in place. So things are moving as envisaged by Hindustan Copper.
And what, so versus what is the current capacity operational, Mr. Singh? I'm just trying to ascertain that if March 2025, you did about 2,071 crores on a particular capacity, and if you're targeting an X capacity, just for people to try and do a rule of thumb calculation, I'm sure there are a lot of moving parts within that. But since you can't give a formal guidance, I'm trying to ask the question so that the analyst community can make some assumptions about what the numbers could look like.
See, don't ask me the numbers. It's not good to, because it's a very
I'm
volatile.
not asking you the numbers, sir. I'm just asking.
Yeah.
No, I'm just asking you, sir, that FY25, what was the operational capacity that you operated on, so that I get some gauge?
Yeah, definitely. That was 3.47 million tons of ore was there and plus 25,000 of MIC. This year, definitely, we will be much, much ahead than those figures.
Wow. So Hiral, technically, from 3.4 to 12.2, with an assumption that everything goes as per plan by
Plan.
FY32, that's about a 3.5 times
Increase
capacity
in terms
expansion
of
than
capacity.
whatever the utilization is. And they did about 2,071 crores in FY25. So people can maybe try and do some bit of the math.
And you know the profit that the
Profitability
company
is
gets
improving
as well,
anyway.
right,
Yeah,
on the
yeah.
100. Now, to add to this, Mr. Singh, you know, what I want to ask you is the strategy when it comes to the domestic market, because currently the market share is, what, 5%? You've mentioned that the demand is very strong in the domestic markets as well, from renewable energy, EVs, infrastructure development. So what is the strategy to then increase your domestic market share?
See, what we are doing, we are focusing more on exploration. We are exploring those parts of our mining areas also which have remained unexplored. In fact, we have enhanced our reserves by 134 million tons in last 3 years. So that is one of the plus point, and we are still moving ahead. We are putting in more money, more capex in exploration from say 30, 35 crores to up to 50 crores per annum as far as exploration is concerned. Number one. Number two, we have made lot of MOUs you must have observed with the big Maharatna companies, and we are bidding for the new copper blocks which are going to come up from central government or from the respective state governments. Number two. Number three, we have already come into an agreement with the Codelco, which is the biggest copper company of the world based in Chile, and with them we are doing some due diligence for some copper blocks also, and they are also adding up our capacity and capability building, and they are also helping us in depth exploration. So these things are in line, and we are trying to reopen some of the more closed mines. So this all together, whatever I've mentioned here, these together adds up to the strategy how we will shorten that gap. Because my prime duty as a miner to the nation is to bring down this gap 4 to 5%, which I'm saying 95% should be reduced. So apart from that, we are into some critical minerals also. We are trying to explore our tailing dams, dams, etc. Already some exploration is going on. This is a first of its kind in India, drilling a tailing dam, which is a loose soil, I should say. So, and we'll like to see what results come up, because unless until the results come up, I can't mention, but we are moving in all those directions. We have tied up with the Center of Excellence, IMT Bhubaneswar, NML Jamshedpur, IIT ISM Dhanbad. We are doing a lot of R&D, how to process those ores, what kind of critical minerals are available in our ore body. So these are things we are parallelly doing apart from production of copper.
So, Mr. Singh, you know, then my question to you is, with all of this that is on the annual with regards to your MOUs, your acquisitions, your Capex that you had planned is around 2,000 odd crores. So what is that allocation going to look like? Are you going to need more than 2,000 crores to execute all of this? And then what does that return on investment look like? And the impact on the balance sheet if you have to look at 2026?
Those figures were slightly old. As of now, we are going to put in roughly 2,000 crores alone in Malanjkhand.
Okay.
Alone in Malanjkhand till 3031. 1,000 crore will go to Khetri mines in Rajasthan, and roughly tentatively 1,000 crore will go to Jharkhand. And I would like to add in Jharkhand one mine, Rakha mine, which has been given in the MDO mode to JSW Group on revenue sharing basis. They will put in their own investments, which is in the tune of 2,400 to 2,500 crores. So that is a separate. We are not going to make any investments there. So if you sum up, 5,000 crore is from our side, 2,500 crore will be spent by JSW. So this is the capex which is going to come up in 5 to 6 years in the phased manner. As far as amount is concerned, we are already tied up. You see, we don't have any loans. 120 crore loan is there, so we'll take debt. We have already approvals from the board regarding bonds, and we have already obtained a QIP approval also years back. That amount is also with us. So as far as the cash flow is very good. You must have observed from our annual reports and the second quarterly results also. So as far as funds are concerned, we are fully tied up. There's no issue of the funds.
I think final question from my end is, how possible is it to predict the operational metrics? So from 2021, FY21, operational EBITDA margins of 23%, you moved them to trailing 12-month margins of 38%. Superb efficiency, plus the prices would have helped. Is it possible to kind of crystal ball gaze about EBITDA margins? Don't give me numbers or revenue, PAT, etc. But do you think this 35 to 40% EBITDA margin band is sustainable for the next few years?
I will give you here, I'll give you the figures. We'll try to maintain more than 40%. Here I am giving the figures. We'll try to maintain that 40% barrier. We'll be above that.
40% EBITDA margin.
Yes, yes.
Okay.
That is a very strong number to look at. Okay, so to maintain that 40% EBITDA margin, Mr. Singh, my question to you is the copper price volatility. You know, a lot of analysts that who we've been talking to are expecting a 15 to 30% increase by mid-2026 when it comes to copper prices. How much of your FY27 or maybe 26 revenues are hedged, and how much is exposed to LME spot price fluctuations then?
We don't do any hedging. Our selling is on the spot basis. So we are not worried about it. Although it's a volatile, you have already mentioned. So we are vulnerable to the downside also. But I can tell you one thing, ma'am. No metal is near to the properties which copper has.
Okay, so Mr. Singh, what kind of pricing are you baking in your financials when it comes to copper?
See, as of now, it's more than 12,000 plus, 12,400, I should say. But it's very, our pricing is very dynamic, I told you. It's very dynamic. It's on the spot.
Mr. Singh, can I ask you a simple question? What is your outlook on copper prices, sir?
It has to remain tight.
Okay. That says it all. We will not push you for more numbers.
Yeah.
Maybe we'll talk to you post your numbers, Mr. Singh, wherein you might be a bit more free to talk about those numbers. But you've given us so much of ammo on day one of the new calendar year, and analysts, I'm sure, will be working their Excel sheets based on this conversation. But we wish you all the best for having a very successful 2026 and in your quest for doing the service to the nation via increasing output as well. Thank you so much from Hiral and me and the team that put this show together, Mr. Singh.
Thank you.